Thank you for joining us and welcome to Business Morning. I'm Chimeze Obi Iwagu. President Muhammadu Buhari has described agriculture as the backbone of Nigeria's economy, posturing that the inclusion of youth in driving modern methods of farming would provide the needed boost for Nigeria's economy. He was speaking at the State House during the launch of the National Young Farmer Scheme, designed by the National Agricultural Land Development Authority to increase the interest of young people in agriculture.
National Agricultural Land Development Authority, NALDA, is a very important tool in our drive to achieve food security in Nigeria and a very strong avenue to engage our youth into gainful employment. This government will do everything to ensure that NALDA's mandate is translated to food security and sufficiency in the country. I have given all the necessary approvals that NALDA requires for effective take-up, beginning with areas of adequate land preparation for crop farming and livestock rearing. Agriculture is the backbone of our economy and the largest contribution to our GDP. But we could do more to expand, modernize, and revolutionize our agriculture, which is our most important asset.
That was President Muhammadu Buhari, Nigeria's president, talking about the importance of agriculture and the need for us to do more to bring in more youth into the agricultural sector. Well, joining me now to speak on this young farmer scheme is a young farmer who has been in the farming business for a while. He's the Chief Executive Officer of X-Ray Farms Consulting, Mr. Africa Farmer Mogaji. I just wondered, how young at heart are you?
Really young at heart.
Well, you know, yesterday I asked you, are you a youth?
At heart.
At heart,
Yeah,
right?
I deal
well,
with
you
youth.
are after you,
Yeah,
you are,
really,
of course.
I'm not that old.
Anyway, so how does it feel to be a young farmer? And as a startup, what were your challenges and your limitations?
Well, the interesting thing is I started as a teenager, and I've not left the industry some 20-something years later. And so acceptance, the environment, the community accepting you, it's a major challenge. That's one. I recall an experience in 2008 when the then, of late memory, Senate Committee Chairman on Agriculture came to meet me on a 250-acre project I was handling. And when he came there, he said, "Is this the boy we have been waiting for?" And he said, "What are you doing here?"
Why do you think they would have to show such a surprise to a young boy who is into agriculture?
He didn't even though he was chairing agric for the nation, he didn't expect me to be that polished and well-dressed on the farm.
Yeah.
You know, so the reality and the perception and what we think, they're two different things.
Yeah, absolutely, because I mean, that's one of the problems or challenges of getting these young people into agriculture, because a lot of people think agriculture is meant for older people, is a dirty job, is a difficult job, and then a lot of these young ones would want to rather go for, white-collar job,
Yes.
and one would wonder why that is so, and why is it important, for youth to participate in agriculture?
Basically for food security. Nigeria needs our youths to come into the sector. But more than wanting the youths to come into the sector, we need to package agriculture the way the youths perceive it. And, it's not about a lot of farming, a lot of opening up of land, even though that is very crucial. But that is the smallest in the value chain.
So tell me, how does a youth perceive agriculture, and how would a youth want agriculture, to be that would actually attract him?
Yeah, so like agric is a value chain.
Absolutely.
So there's a value chain that is appealing to the urban youths. There's a value chain that is appealing to the rural youths. So the value chain appealing to the urban youths is the trading, the marketing, the branding, which you have to spend a lot of money in changing the picture they have. And for the rural people, you just need to show them a future that is different from what their parents had gone through. Because the youths in the rural village have seen their parents, poor, wretched. They've not seen how using mechanization, just mechanizing it from not just tractor, but sprayer, harvester. Once they see that, it begins to become more appealing to them. So we need to, package what we show to those two segments of the youths.
Okay, now we have the president launching what he called the National Young Farmers Scheme. What do you expect this scheme to now drive, considering your own perception as to what should drive the youth into the agricultural sector?
What I heard the president talk about was NALDA. NALDA organizes lands, but NALDA has not been active for about 20 years. So, yes, it's always good to see that the president has a strong passion to see development in the agri sector, and not just the passion to talk and put some actions behind it. However, it is how is it going to work? So NALDA has been behind the scenes. Now that NALDA is in front of the scenes, ahead of Ministry of Agriculture, ahead of Ministry of Water Resources, ahead of National NDE, National Director of Employment, how do they work together? Because NALDA can only open lands and give inputs, which is what other ministries have been doing. So how do they integrate it together? There's a lot of focus on production, and it should be value chain. So I'm hoping that the president narrowed around the production, which is the primary, but the value chain is what we need to hear now. If not, we will produce more, and yet it would add to what is going to waste.
Now, the issue here is we've had, we keep coming up with different schemes, different programs, fantastic as they may be, but then when it comes to, after a point, we end up not even hearing about it.
Yes.
But one interesting thing here is that the president is going to be, the NALDA is going to be answering to the president. So the president has his eyes on this particular scheme. Do you think that would perhaps change the narrative going forward?
I doubt it.
Why?
I doubt it because if it is still government led, we know government is not wired. The bureaucracy in policies and co may stifle this project, to some point. It needs to be private sector driven, with NALDA having an overseeing function, reporting to the presidency. So instead of buying, because NALDA used to have all those equipments, they don't exist again, sold off, scrap. Now, government, my expectation vis-a-vis the current realities after 20 years is that the equipments that will be bought will be given to private sector to run. If that is done, the project will last. We can open more lands, but productivity. Opening land is one. Production is one. Opening land will increase production, but will it increase productivity? Productivity is what will sustain the processors. So it's a value chain that we're hearing the opening of land, but the thing is, are we, are the Chamber of Commerce, are they involved? The associations, are they involved? Because they must all be involved for it to succeed. NALDA cannot do it alone. It's the reports they give to the president that they will read. And that's where the challenge always is. There are beautiful reports written over years on each program, but you just look back and you find out, where is this product that, we've invested heavily in, so there's always, it's not balanced. What you see, what is written, what is projected vis-a-vis the realities. People would ask, where is this item? Where is that item that we are reading beautiful stories about? So we need it to be real.
Now, let's just hope that perhaps this scheme is not basically centered for those in the urban area. Now, when we talk about agriculture, remember, those in the rural area should be where the attention is. And we know that we have quite a number of youth migration.
Yes.
The youth migrating into the urban area.
Yeah.
And I think this has to be discouraged. So how do we begin to push some of these things into the rural communities to get them to understand? You talked about mechanization. Well, one thing is to bring mechanization, another is capacity to use such machinery. So how do we begin to drive that course?
Now, the beautiful thing about this initiative is when it comes to NALDA, they can only open lands in the rural areas. So the lands are domiciled in the rural areas. So they will open the lands. But will they, beyond opening up of the lands, will they bring small equipment, not big 75 horsepower tractors? That's what mostly is brought in. But what is required are the small tractors and co. So bottom line is that it will get to the rural youths. But the other value chain, how are you going to move what is harvested? How are you going to train? The NALDA and the ministry should not get involved in training. They should get some of the colleges of agriculture, and they are virtually in every region because the colleges of agriculture have technical knowledge. This is pure technical. And so if they don't involve the colleges of agriculture, they will open up the land, but the capacity, the knowledge required to make things happen is domiciled currently in the federal colleges of agriculture, which is also a federal arm. So, but we need to see a blueprint, a total package of this, how this is going to work. Most importantly, we need the NGOs to be involved so that the monitoring and evaluation, so that whatever is written to the presidency is actually what exists in the field. And the NGOs can monitor. The media, I've not seen media component, but maybe when they open it up, the media component is even bigger than what is really happening because the presidency and the people working with him would only get the truth from the media. So a media component of this project is very crucial also.
Now, you talked about colleges of education. That brings to the issue of education in agriculture. How serious are we taking our curriculum, inculcating that culture of ensuring agriculture as part of us from the start? From school. Well, I remember when I was in primary school, even though I didn't like that, I would have to go to one of my projects in primary school. I have to go to the farm, to work. I didn't like that actually, but I think looking back, I think that's one way, government can actually encourage youth to begin to develop that interest into agriculture. And then for you, as a youth, you started quite young. How have you been advocating? How have you been inspiring other youths to come into agriculture?
Well, firstly, when you spoke about your primary school, in secondary school, when you are to be punished, they send you to the farm, which is part of the mindset that need to change.
Yes.
So from secondary
they see
school,
that as punishment.
Punishment is farm. So when you leave secondary school, you don't want to go back to pain.
Because of my experience in primary school, now when I got into secondary school, when it was time for us to, actually choose our courses, I said, man, I'm not going to do agriculture for anything.
But what we do now and what we've been doing for a number of years is we collaborate with government. Government parastatals, they have some underutilized facilities with irrigation, with equipment. We support the youths there to produce, and we grant access to market with some capacity development. So we've been doing that, and I personally collaborate with a lot of business development organizations, Fit Foundation, and actors. A lot of global and national organizations to help them make information and coaching available. So we have quite a lot of foreign NGOs funding different projects, but if you don't have some commercial knowledge to back it up, it won't. So yeah, we play in that space. We do a lot of radio advocacy also.
Right. So what would be your last words to these youths? Because it seems to have become paramount that we don't just have to have older ones in agriculture, into farming, be it, crop production or animal rearing.
Rearing, yes.
Yes. So what's your last words to these youths? How do we begin to move forward? Now we're talking about unemployment rate. I mean, with agriculture, I'm sure that would be one area that can actually solve that problem of unemployment.
First and foremost, I would ask the youth to open up now that at the president's table is focusing on the youth in agric. They need to open up and embrace this policy. And two, they need to help the president monitor, to send information out with the social media like they do, to send real information to the presidency so that the presidency can know when to tweak, the projects and what is working, what is not working, so they can improve. But I know that the presidency and the president, they both know that for Nigeria's food security, we need the youth. So now the youth should not say it's business as usual because the food security of Nigeria is dependent on them now.
Absolutely. When I look at the price of food, commodities in the market, sometimes I wish I can actually do this farming and farm some of these products. But I'm sorry.
I'll take you on a coaching course.
Okay, I'll think about that.
Yeah, media in agri.
All right, thank you very much, Mr. African Farmer, for sharing your thoughts here with us.
Thank you for having me.
Right. Now, some artisans and transport operators in the Federal Capital Territory have started benefiting from the federal government's survival fund. The one-off grant of 30,000 naira is to cushion the effect of the coronavirus pandemic on their businesses. At the disbursement ceremony in Abuja, the Director General of the Small and Medium Enterprise Development Agency of Nigeria, Mr. Diko Rada, explains that the target is to support 333,000 artisans and transport operators across the country.
Artisans and transport operators from different parts of the Federal Capital Territory are here for the 30,000 naira grant promised by the federal government as plans to cushion the effect of the COVID-19 pandemic. The recipients applaud the government for the scheme, but like Oliver Twist, they are asking for more.
They were capturing people even under the sun, even when it was raining. These men and women were doing their work. Shortly after that, we started hearing our people coming to tell us that they were receiving alerts. Many people in my own group and the people that did not participate, that are not under my own association, they received alerts.
We are in the association registered with 200 names. About 190 names were enumerated. The data were taken. And about less than 25 of us anyway, I am included, who have this money. We receive a lot from this money. So what we are actually telling the government is we appreciate government for this kind gesture to us, and we want to ask them that they should do more so that many others will get this money.
The committee assures that the grant, which is distributed in batches, would go round.
And what we are coming here to do today is to know exactly whether the first batch of this segment is being paid or not, whether they have received their money or they have not received their money, and then we'll be able to know where we stop, how are we going to take it up, how are we going to pay the remaining people who have been captured, because as far as we are concerned, each state was giving a number, Abuja was giving a number, and we'll make sure that the numbers given to Abuja will be met.
For those of them that have registered and have been verified, we can tell you that they will collect their money. Some of them are lucky to have collected their money already. So, and I also let them know that the numbers that we have, basically, you have a sense where in some clusters, some people will collect, in some clusters, some people will not collect. And so that's why we're urging people that the earlier you go and apply for this thing, the earlier you get them to enumerate you, the better.
The Artisan Support Scheme, which is a one-off grant, is just a part of the Micro, Small and Medium Scale Enterprises Survival Fund program.
And after the break, we talk commodities as well as some developments in the Nigerian capital markets. Do stay with us. Starting off with global oil market, where prices rose today, taking the week's gains to more than 11% on growing hopes that the world's major producers will hold off on a planned supply increase as soaring cases of COVID-19 dent fuel demand. U.S. West Texas Intermediate crude futures climbed 12 cents to $41.57 a barrel, while Brent crude futures rose 9 cents to $43.89. Algeria's Energy Minister said on Wednesday that OPEC Plus could extend current production cuts of 7.7 million barrels per day into 2021 or deepen them further if needed. The weakening outlook has piled pressure on OPEC Plus to hold back a supply increase of 2 million barrels per day scheduled for January, with the market now pricing in a delay. Both Brent and WTI have soared this week, lifted by hopes that the global coronavirus pandemic can be brought under control after initial trial data showed an experimental COVID-19 vaccine being developed by Pfizer and Germany's biotech was 90% effective. In the meantime, fuel demand is under pressure from rising infections in Europe, the United States, and Latin America. As a result, OPEC has said demand will rebound more slowly in 2021 than previously thought. Analysts at ANC Research said the outlook for crude oil demand has darkened because of new pandemic restrictions, which could push the market back into surplus in the fourth quarter. For more updates on commodities market, I have with me Bolanle Abaje, research analyst with Financial Derivatives Company. Bolanle, good morning.
Good morning.
Well, we've been talking about agriculture development. I'm sure you listened to my discussions with this African farmer on the Young Farmer Scheme launched by the president. And one of your burning economic issues there is the unveiling of the private sector-led agriculture development scheme. Now, can we categorically say that Nigeria is now ready to do agriculture as business?
We've been ready for a long time. I think the only thing that we had not, obviously the mindset of the youth, a lot of the youth still are not seeing agriculture as a go-to business. It's not cool. It's not it's not part of the culture. It was then for the older generation. Now it's time to make it more attractive for the newer generation. I think from what your previous guest mentioned is the important factor there is the private-led, scheme, in the sense that it'll be more attractive if you allow the private sector, do what it does best, as this would create a long-term standing with the agricultural, process. The government should involve themselves with providing funding and all of that and making it easy to access the scheme. But I think leaving the private sector to do what they do and, making it profitable for them is what would, see a significant drive in the agricultural process.
Now, if we get it right this time, what will be the implications for food commodities particularly?
It's as simple as this. If we do get it right, it means in the medium to long term, we should be almost self-sufficient in producing a lot of these agricultural products.
And we should be able to export as well.
Exactly. And we're blessed in different parts of Nigeria, we can find different agricultural products if well tapped. So if we do see this kind of scheme, push itself in the next few years, we should definitely see agriculture or Nigeria becoming one of the largest agricultural producing countries.
Well, Ms. African Farmer talked about the need to have a well-coordinated agricultural value chain.
Yes.
Yes. So how important is that for you?
No, it's very important in the sense that it's not just from the farm. You need to, understand that as soon as the goods are produced, it needs to be transported efficiently. It needs to reach the consumers, appropriately and with the right quality as well. if you only produce at the farms and, you know, those goods are left there, there's no proper value chain to take them from the farm directly to the consumers, then it means that, you know, some of these products will go to waste. And it might even, you know, push some farmers away from, you know, continuing the process of producing some of these agricultural process
And that
products.
brings to the issue of developing our infrastructure. We're talking about light, we're talking about good roads.
Good roads, good infrastructure, you know, and also even the machinery in the process of storing. Storage is a major issue. Storage and distribution, those are the key, you know, issues when it comes to producing some of these agricultural products.
Now, the issue of border closure is also coming up
Yes.
again, where we have Dangote and Bua now being given access.
Yeah,
Yes.
they're giving a waiver to export, you know, cement.
So, but then one would wonder
why is it an issue? So I think it's just because on social media there's been huge backlash. They've mentioned that, you know, Dangote and Boa Group, especially Dangote, they've been given, you know, preferential treatments once again. And why is it that it's just those two companies that are able to export, you know, their products through land borders and all of that? But I think, you know, from the economic side of things, you would look at the issues of monopoly, duopoly. They've been given like a first hand or an advantage when it comes to, you know, improving their business and increasing their sales within their within the cement industry. So I do understand where they're coming from, but also it will probably mean that the government would most likely review this and also give access to other, you know, companies to start exporting their product. But I think the issue there initially, when they actually closed it, was because of smuggling, and we do hope that, you know, there is no issue of smuggling going forward.
Yeah, talking about opening up that border, now that we have, the federal government has just ratified the African Continental Free Trade Agreement. So how do we now begin to position the country to take advantage of this?
So opening the borders would be one of them. You know, it would create motivations for some of these companies to start producing more than, you know, what they have, or what they had to reduce to due to the coronavirus. It will definitely increase sales, and also new entrants as well, new entrants into the industry to motivate them, to keep the economy going. And it's also beneficial for our economy in general, because, you know, we had seen our gross domestic product decline significantly due to the pandemic. So it will definitely boost our GDP and also, you know, increase money in circulation as well.
Yeah. Okay, another issue there is the issue of fuel scarcity, which seemed to be rearing its head again. What's the implications for commodity prices, particularly at this period? Well, I mean, aside from the pandemic, yes, we're dealing with the pandemic and economic shape, but then a lot of people are looking forward to Christmas.
I think it's coming now, although obviously the news with NNPC or the disputes that was going on, most people expected that, you know, due to that, there was more likely to be a scarcity of fuel. But I think it's coming now because particularly during the Christmas period, we had always seen fuel scarcity. But the NNPC has come out to say that this is not going to happen and panic buying should stop. So I think in the next week, we shouldn't, you know, see this kind of panic buying anymore. They said they've confirmed that this stock is enough to take us through Christmas. So I don't see any a disadvantage of that happening anytime soon. But technically, if there is panic buying in the society, it definitely affects commodity prices due to increased logistics costs, even increased traffic as well. You know, that obviously has negative impact on
All right, Bolanle, a quick one before I let you go, looking at the global oil market and, of course, the global commodities out there. What's the outlook as we go into a new week?
Well, the outlook is, I do expect that the riding or the highs from the vaccine news would taper down a bit, or would bring prices down to normal levels. All prices are still riding on the vaccines high. So next week we do expect that, you know, all prices would taper down to about 43 or remain at about $43. If it does increase, then it's good news for us. But that's where we see all prices at the moment.
Okay, thank you. We'll leave it at that.
Thank you
Thank
so
you,
much.
Bolande.
Thank you so much for having
Right,
me.
Bolande Abaje is one of the research analysts with Financial Derivatives Company. And yesterday at the Nigerian Treasury bills primary auction, stop rates approached zero levels across all tenures on high system liquidity. Bolaho Aino, acting managing director at Codros Asset Management, will speak to us about this, plus the expected GDP numbers and the upcoming MPC meeting. Good morning, Mr. Aino. Thank you very much for joining us on the program.
Good morning, Chimeze. Thanks for having me.
Now, looking at the Treasury bills auction results of yesterday, how impressed are you?
Well, not impressed because I'm an investor. It means that my returns are getting worse. It was quite surprising though when we saw the outcome of the result. The 91-day close at 0.0350, which means that you're basically giving the government your money at 0%. And quite remarkable, the auction was 4 times oversubscribed. So CBN wanted to raise about 19.78 billion. About 99 billion was subscribed. For the 182-day closed at 0.15%, they were going to raise 40 billion. 92 billion was subscribed, and they finally raised 10 billion. And for the 1 year was 0.3%. These are quite abysmal for an investor, considering that our inflation rate is also at 13.71%. If we're in the UK or the US, maybe it would have been understandable. In UK and US, their numbers are around this level. In the US, for instance, their 3 months interest rate is about 0.1%, but that's quite understandable because their inflation rate is 1.4%. In the UK, their inflation rate is 0.7%, but Nigeria has an inflation rate of 13.71%. We expect the next inflation figure to come out next week Monday. So it just means that people are making a negative return on their investment, and there's somewhat an disincentive to put money in fixed income or money market instruments because really are making near to nothing at the moment.
Now, what is your outlook for interest rates?
So if you look at the body language of the CBN at the last MPC meeting, it still shows that they might want to keep rates lower, and quite understandable. The COVID-19 pandemic has shaped the narrative, and in line with what central banks across the world have done as well, they have also kept interest rate low. So in order to support economic growth, to make sure that the economy is expanding, they might want to ensure that rates are a bit low. We expect GDP figures for Q3 to come out in 23rd of this month. And as expected, Nigeria is going to enter a recession. And apart from that, there's an economic phenomenon that is going to really play out, which is the stagflation, which is the high employment. Our employment rate is at 27%. We have high inflation rate, 13.7%. When inflation figures for October comes out, we expect to trend up. And of course, negative growth. And really, government needs to choose between either spurring growth or tackling inflation. Really, inflation is a lost battle now at 10.7%. So I believe they're going to want to either focus on GDP or on economic growth. So we expect rates to be lower for longer for now.
So how can, you talked about the expected GDP numbers, how can investors now recession-proof their portfolio?
Yeah, so it's important to, I like that question. It's important to be able to ensure that you don't lose the value of your investment. Because as it is now, once you are investing, it's as if you are losing money. Because your return on investment is not able to catch up with the growth in inflation. So for instance, you are probably buying a piece of item maybe for $100, and inflation rate is at 10.7%. It means that that item is probably going to grow by about 10.7%. I mean, while your investment can't grow by that much. So you might not be able to afford what you could be able to afford because of a squeeze in your wallet. So you look for investments that provide capital appreciation benefits, apart from investment that just give you a safety and liquidity benefit. And good enough, the stock market has done well this year. It's done over 20%, although it's turned on a slow note. Thanks to COVID-19, thanks to oil price. Oil entered negative territory sometime in Q2, but of course it's bounced back, and people need to carefully begin to allocate their investment from just fixed income or money market instrument to investment that can give you capital appreciation benefits. And I think equities will do that for you. Also, trading in bonds will do that for you, but you need to be skillful in that because there are risk factors in trading in bonds or trading in equities. So you need to be skillful in that regard.
So are there investments that provide the much needed inflation hedge during this period?
Absolutely, yeah.
All right. Thank you very much, Mr. Aino, for your time.
Thank you very much.
Bolaho Aino is the acting managing director at Codros Asset Management. All right, let's look at the Nigerian equities market. The market continues to enjoy buoyant session as the all-share index advanced by 1.9% to 33,268 points. Yesterday, the performance was driven by sustained interest in MTN, which went up 2.4%, Nigerian breweries 9.5%, Boer Cement, and of course, Tier 1 Bank, Zenith Bank, and GT Bank. Okay, let's talk to Kayode Oluyemi, stockbroker at CSL Securities. Good morning, Kayode. Thank you very much for coming through to us. Seem to have lost Kayode there. All right. Now, the total volume of trade yesterday increased by 48.3% to 858.16 million units, valued at 9.06 billion naira and exchanged in 8,142 deals. FBNH was the most traded stock by volume at 145.05 million units, while Zenith Bank was the most traded stock by value at 1.52 billion naira. Good morning, Kayode.
Hello, good morning.
The market seems to be on steroid. Where is it heading to?
I think the market still has a lot of room for on the upside. If you look at yesterday's Treasury bill auction, 1 year was about 0.3% stop rate. So we're seeing people basically looking for where to put their funds and moving away from fixed income to equities in search of higher yields. The numbers that a lot of companies have also released have been decent, very strong numbers. So that's very supportive of the market. So I think that the market still has some room to on the upside, just on the back of low fixed income yields.
Now, earnings season is gradually winding down, but there are a couple of companies yet to post their earnings, particularly in the banking sector. When do you expect to see these results?
Once they get approval from CBN, we should see that those numbers come in. There's already an extension that was granted to companies by the SEC, so we expect that those numbers will come in within the deadline that has just been given to them from the SEC.
Now, what do you make of this? Okay, Kayode. Now, what do you make of this news, that the Securities and Exchange Commission is making a move to withdraw certificates of about 157 capital market operators?
On that, I mean, there are several firms in the market. Many of them have been dormant for several years. So I think it only makes sense for the SEC to sort of streamline and sort of get the right size of firms that are actually operating in the market. So I think it's in the right direction. So we know who is doing what and who is not doing what. And it's also a very good guidance for investors to know that the players that are actually active and doing proper business in the market.
Okay, today's trading has just started. So what is the day looking like?
Very strong start to the trading this morning. Before I joined the call, market was up by over 4%. So interest is still very strong. Like I mentioned, yesterday's auction, the yields went even further down. So there's still strong demand for stocks this morning.
Thank you very much, Kayode Oluyemi. We'll do an opening call to London, as well as look at the debt and currency side of the market after the break. All right, let's get some updates from London with Juliana. Good morning, Juliana. GDP figures just hit the news wires. What does it say?
Well, it is UK GDP day, and the number that we're seeing for Q3 is actually record-breaking. The economy grew between July and September by 15.5%. This is the highest quarterly recorded growth on record. And what that technically means is that Britain is no longer recession, although we both know that headline numbers don't necessarily tell the full picture. Although we have seen growth continue to grow, growth has been slow, and in July the economy grew by 6.6%. It steeply dropped to a growth of 2.2% in August, and we've just realised from the figures we received by the Office for National Statistics that in September it grew by 1.1%, and this was when Britain was technically out of a lockdown. We've now gone into a lockdown, so there are concerns that perhaps Britain may do a double dip, so out of recession, then we'll dip back into recession. The Bank of England last week, of course, they expanded their quantitative easing programme by £150 billion. The Chancellor also increased the furlough scheme, the job retention scheme, to stop this tsunami of job losses that we were expecting. So although the 15.5% is record-breaking, it is still short of the 16% that economists had predicted, and we are starting to see that growth is falling. And of course, the golden quarter, the time where retailers and the hospitality sector would typically look to claw back all of their lost gains from the beginning of the year, they won't be able to do that. And there are some suggestions, I believe it's the Times newspaper, that are reporting that as soon as we are out of this English national lockdown on the 2nd of December, we'll be going back into these tiered restrictions that we had just before the start of November. Chancellor Rishi Sunak, as you can imagine, has been giving a round of interviews. I've got a quick statement that I'll share with you, Chimmy. He did say that today's figures show that our economy was recovering over the summer but started to slow going into the autumn. The steps we've had to take since to halt the spread of the virus mean growth has likely slowed further since then, but there are reasons to be cautiously optimistic on the health side, including promising news on the tests and vaccines. So the breaking news out of here is that Britain is no longer in recession, but we're likely to enter back into it before the end of the year.
Well, I guess I'm looking at a W-shaped recovery there. Anyway, there is a steep rise in emergency borrowing by low and middle-income households to cope with the COVID-19 jobs crisis. Is this a signal Britain may possibly be sleepwalking into a debt crisis?
Well, possibly, according to the information and the data that Step Change, the charity, have been collating. But as we've seen in lots of economies, including in Nigeria, it doesn't affect everybody. It typically affects those who are on the lowest of incomes and from less privileged backgrounds. Since the beginning of the pandemic, over three-quarters of a million people have lost their jobs. And there has been some criticism about the universal credit system. This is basically a one umbrella fits all scheme to help people who are looking for jobs or who are being paid below the minimum wage. And because of the swift loss of jobs, there are several families, in fact millions of families, that had to turn to payday lenders and people that charge high interest rates on debts because they couldn't afford to wait the 5 or 6 weeks, which was the backlog of the universal credit. So this is the data and the individuals that Step Change are focusing on. They have seen that borrowing and arrears have soared to £10.3 billion this year because of the pandemic. That's an increase of 66%. There are 1.2 million people who are now in really serious arrears or in a debt crisis, and they're struggling to get out of it. Of course, we know the government have responded to some of these allegations before by saying that they have increased the job retention scheme. They are giving people the assistance that they need. But for some people, it's just not enough. And we know from the unemployment figures that we received early this week that because the job retention scheme was just extended at the last minute, some employers had to get rid of workers before the announcement was made. So it's a pretty serious issue. And again, it's a topic of much discussion here in the UK. I don't want to name drop him again, but Marcus Rashford, the Manchester United superhero, as he's being called, he's being tackling Boris Johnson, the Prime Minister, to try and get the government to pay for children from less privileged backgrounds so they can eat whilst they're not at school. And so this issue is of major concern. There is another soundbite that I think is worth mentioning. Phil Andrew, he's the charity's chief executive, the Step Change charity that came up with this data. He said this winter a second national lockdown will drive unemployment, reduced hours and rising energy bills, all of which is hampering economic recovery. Without a bold long-term vision for those financially affected by the pandemic, there's a real danger of lasting economic and social damage. And as we said, once again, this obviously only affects those who are less privileged.
And then this report, commissioned by the Chancellor, is recommending a major overhaul of capital gains tax. What are you hearing on this? How will this help in this whole thing?
Well, it's an interesting story. This is a tale of two households, because capital gains tax, which is a tax that individuals pay on assets. So if you've got a second property or shares, you'll pay a tax on that. I believe at the moment it's about 20%, although under this new report that the government have commissioned to the Office of Tax Simplification, they're suggesting that this tax should actually be risen to 40%, and the threshold, which is currently £12,500, should be reduced to about £4,000. Now, the reason why it's a tale of two households is because it only affects wealthy individuals, and that's about 0.5% of the population. So most people, most of our viewers, people like me, this won't affect, but it will affect the Tory stronghold, you know, those who have been doing pretty well in life and typically pay less tax. But as we know, COVID-19 has completely ravaged the British economy. It's gone deep into the coffers, and the taxpayer has to pay it back. And Rishi Sunak is dangling with the idea of, putting some of the responsibility on the very wealthy, because at the moment debt in this country has surpassed £2 trillion. That's because of the job retention scheme, because of all these loans that are backed by the government. And it does appear that the capital gains tax could potentially be one of the ways in which the government can start clawing back some of this money. They have done their calculations, and I believe they've said that they could potentially get £14 billion if they were to reduce the threshold and increase the amount by 40%. But of course, the Tory stronghold are not happy about this. I was watching an interview with the Chancellor early this morning, and when one of the reporters tried to get some information from him, he refused to answer. So perhaps this is just one of the varied reasons. But sometimes, yes, the very wealthy do have to help out those who are less privileged than them.
Juliana, see you later in the afternoon. Okay, back here on the debt and currency market. Well, activities at the Nigerian Treasury bills market were bullish, as some average yield contracted by 5 basis points to 0.5% across the curve. All right, let's talk to Kenye Ewebi, fixed income dealer with FSDH Merchant Bank. Good morning, Kenya.
Yeah, good morning. Thank you for having me.
Now, the results of yesterday's Treasury bill auction showed rates approach zero levels across all tenure. What then do we expect from the market today?
Okay, the Treasury bill market was relatively quiet yesterday because participants shifted their attention to the NTB auction. At the auction, we witnessed a high level of substitution, and as expected, stop rates declined significantly across the three papers on offer. The 91 days closed at 0.035%, the 180 days closed at 0.15%, and the 1 year paper closed at 0.3%. We expect the market to be very bullish today, because investors that lost out at the auction yesterday will be hoping to fill their unmet demand in the market today.
All right, thank you very much, Chair, for updating us on that. Keye Ewebi, fixed income dealer with FSDH Merchant Bank. And that's it on the program. Thank you for watching. I'm Chimeze Obi Uwagu.